What if a company's greatest invention wasn't a product at all, but a process? That's what we're diving into today with Constellation Software. They're this quiet giant in the tech world that, honestly, operates less like a software company and more like a perfectly tuned engine designed to just buy other companies. So let's pop the hood and break down the incredible machine they've built.
So let's start with this one big idea, because it really changes everything. What if a company's actual product wasn't its code or some gadget, but a repeatable, almost scientific process for acquiring other businesses and just making them better? That right there is the exact lens we need to really understand Constellation Software.
Okay, so here's our game plan. First, we're going to define what their perpetual acquisition engine actually is. Then, we'll look under the hood and see how this machine really works. After that, we'll talk about its greatest enemy, something called the law of large numbers. And to wrap it all up, we'll ask the big question: can this engine really keep running forever?
All right, let's get right into it with their acquisition engine. The key here is you kind of have to forget everything you think you know about normal tech companies. Think of Constellation less as a software business and more like, well, a masterclass in how to reinvest your money. It's a financial machine wearing a software company's clothing. So there's actually a name for this kind of business: a serial acquirer. It's a company that has to keep moving. It has to keep buying in order to grow. The cash that's coming in from the companies it already owns, it doesn't just sit in a bank account. No, it's used as fuel to go out and buy even more companies. It's this powerful, self-feeding loop.
So what's their secret sauce? Well, it's actually a pretty simple but totally brilliant idea. Forget the big, flashy takeovers. Instead, they buy hundreds of small, stable, and frankly, often boring software companies that totally dominate their very specific little niches. And once they're bought, they don't get swallowed up by some corporate mothership. They're kept decentralized, which lets them run on their own, just with a little guidance and some best practices from the top.
Okay, so we get what they are. But now for Section 2. How does this machine actually work? How does this system spit out such incredible returns year after year after year?
It all comes down to this really elegant three-step recycling loop. Step 1, they go out and buy these niche vertical market software companies. We'll get to what that means in a second. Step 2, because these businesses are so sticky and stable, they generate a ton of predictable cash, what we call free cash flow. And here's the magic. Step 3, that cash is immediately plowed right back into Step 1 to buy even more companies. And that wheel just keeps on turning, getting bigger and faster with every single rotation.
So what in the world is this vertical market software, or VMS, that they're so obsessed with? Well, it's not software for everybody, like Microsoft Office. It's software for a super specific vertical or industry. Think about the scheduling software your dentist's office uses, or maybe the management system that runs a local boat marina. That's VMS. It's built for one job and one job only.
And this is exactly why VMS is the perfect fuel for their engine. This software isn't just some nice-to-have tool. It is absolutely mission-critical. A dental practice literally cannot function without its software. And that creates this incredible competitive advantage, what investors call a moat. In this case, super high switching costs. It is a massive, expensive headache to change providers, so customers almost never leave. And that creates a beautiful, predictable stream of cash. Exactly what you need to power an acquisition machine.
But here's where the conflict in our story comes in. For decades, Constellation's acquisition engine has been this unstoppable force. But now, it's starting to run up against an immovable object, a fundamental law of math and business called the law of large numbers.
To put it simply, the law of large numbers just says that as you get bigger, it gets way, way harder to keep growing at the same speed. Think about it. It's pretty easy to double your money when you only have $1,000. It's a whole lot harder to double your money when you have $10 billion. The sheer scale of the company starts to work against you, like an anchor.
And this slide just lays out the problem perfectly for Constellation. Back when they were smaller, finding a handful of good acquisitions was enough to really move the needle. But now that they're a giant, they need to find hundreds and hundreds of these deals every single year just to keep up their historical growth rate. The task becomes absolutely monumental.
Which, of course, leads us to the one central question for anyone looking at this company. Is this law eventually going to win? Is Constellation just going to run out of small, high-quality companies to buy? Is the engine finally going to be starved of the very fuel it needs to keep going? So how do we figure this out? Well, we can't predict the future, obviously. But what we can do is follow the data. The clues to whether this engine is starting to sputter or maybe even getting stronger are all hidden right there in the company's financial results.
If you want to check the health of this machine, these are the gauges you have to watch. First, what's their return on invested capital, the ROIC, on their new deals? Basically, for every dollar they spend on a new company, how many dollars in profit do they get back each year? And second, how is their free cash flow per share growing? Is each individual piece of the company becoming more and more profitable over time?
And this, right here, might be the most important concept of all. A really healthy machine will show its free cash flow per share growing faster than its revenue. Now, this chart is just an example, but that's the pattern to look for. It proves the company isn't just getting bigger, it's getting smarter, more efficient, and more profitable. It's the key signal that they are successfully fighting back against that law of large numbers.
So really, it all comes back to this one idea. Even though Constellation owns hundreds of software companies, the real product, the true genius of the whole thing, is their disciplined process of capital allocation. It's about how they find deals, exactly how much they're willing to pay, and how they fold them into their decentralized system. That's the magic.
All right, so let's do a quick recap of what we've covered. First, Constellation is best understood as a capital allocation machine. Second, its fuel is these niche VMS companies with really strong competitive moats. Third, its greatest enemy is its own enormous size and the law of large numbers. And finally, the way we measure if it's winning isn't by product reviews, but by cold, hard financial metrics like free cash flow growth and ROIC.
And that leaves us with this final, really fascinating question. When you look at this entire system, its elegance, its discipline, its incredible track record, you just have to wonder, is this the most brilliant, self-perpetuating business model of our time? Or is it a phenomenal machine that is inevitably running out of road? For now, the data suggests that engine is still humming along just fine. But the law of large numbers, well, it's always waiting.